are correlation important for you for range trading, or I guess for any trading? Do you look at correlation between pairs?
It's funny you should say that. I do look. I tell you what, I do look at is, for example, if you look at the British pound US dollar, obviously very, very heavily traded, actually a bit of a graveyard for most retail traders. What you can see if you look at that as against the British pound Australian dollar, you will often find that the British pound is several minutes in advance. When I say minutes, I mean maybe 90 seconds, something like that, in advance, which is massive. Not always. You've got to have, so that's sort of correlation in between similar pairs. Obviously, there's correlation. You've got triangular arbitrage and the rest of it. That's very, very difficult. Even the banks can't do that now with banks of computers. They can't really do it. And the fact is that once one gets out of step, it will be arbitraged back into line very, very quickly. So, and they're offsetting the whole time. So if Barclays happen to end up, I mean, this NFP looks like it's pretty weak, but imagine that it was very, very heavily short. You heavily to the downside. You got to understand that the banks actually they're making markets, which is as difficult or if not harder than what we're trying to do, because we're allowed to go in long or short or not at all. They've got to make a market 24 hours a day on both sides. They're just taking the spread, and their book regularly gets stretched one way or another. So if there was a big, maybe the market sold off 200 pips here now, they would probably start netting those trades out against one of the other currencies. So there's a lot of that goes on, and they will be looking at the correlation between. But because of the computers and the way everything is now, it's all arbitraged back in very, very quickly. So I like the correlation where one is leading and the other is following. I certainly like that. And it does occur more often than people think. And you go with the stronger pair, which is the British pound US dollar, obviously, because that's the most widely traded. And then the other one tends to follow suit a little bit afterwards. So maybe hopefully that answers the question. Hopefully, anyway.
Love it. Marcel is asking, how do you prepare for the upcoming stock market crash?
Well, that's a good one. Well, Marcel, again, this is the whole point about, I don't know if there is going to be another crash. I know that sounds like a crazy comment, but it's all over Twitter. It's all over everywhere that something's going to happen. But they quote this crash is going to happen. I just sit on a train and I'm going in one direction. And if you look at stocks, I'm not a stock person, but obviously I know I have people around me that do stocks in my daily business. The US stock market, someone could correct me if I'm wrong, I think was up 40% since Trump came in. They've been calling the crash the whole time, but if you just sat on the train and just went up with the train, which is what the big guys have done, then you'd be quids in. So that crash, if and when it comes, I mean, I use ATRs for stops. So Etienne, average true range stop. I have what I call an Armageddon stop. So I actually trade a lot of positions with effectively no stop, what you would think is no stop, but my stop is way out somewhere where I can't get heard, which is what I call an Armageddon stop. So if you have an SNB, something like that, a really big move. So I've got sort of loads of positions open at the moment. So for example, I've got short position on the euro at the moment, but I got stops which are about 200 points above that, 200 pips above. But that's just there for a catastrophe in case someone pushes a button somewhere, or Trump gets up and says something, or I don't know, Brexit is cancelled, or everything that can happen, because this is financial market. You know what can happen. It happens all the time. But so I just want to be sure that I'll be protected in that case. And that's about, 5 ATRs is about, it's about really, at that level I can handle it. So I don't really, the crash, markets, I think it came off, didn't the Dow Jones came off the other night about a couple hundred points or something. It's bound to reduce a little bit, 4%, 5%, but that's all normal. But I wouldn't call anything. I wouldn't go around calling any crashes. What I would do is try and find a trend, get on the trend, and then just ride it. But keep your stop. You can do it one of two ways. Be prepared to take lots of small hits and small gains, I like to let that thing ride, and I put my stop well out of the way because I don't want any spikes coming down and up and the rest of it, which to catch me. So, and I'm prepared to keep my position sizing very, very small so that I can take those stops and ride to the upside if the trend is to the upside. So that's what I do, and I really wouldn't focus on the crashes and things, actually, to be honest.